Bitcoin is falling like a knife and people are getting scared. People who jumped into crypto during the last few months are panic stricken as their dreams of caviar and yachts is crashing faster than they ever imagined. But I'm here to calm the ship. You have to remember that volatility is what we like about crypto. The fact that Bitcoin can go from 2K to 20K in just a few months is something we love. So when the price drops from 10,500 to 8,500, we need to be appreciative for the fact it can move that quickly. I personally believe that whenever this dump is over, it's time for the moon mission. Where will the carnage end though? In this video, I'm going to show you a particular number that Bitcoin could end up at before bouncing back and climbing to new heights. In fact, many people would say there's a 95% chance that we go down lower, but are they right? Today, we're looking at Bitcoin's targets as I analyze the mysterious CME gap. Let's get it. Hello and welcome to BitBoy Crypto, your one-stop shop for all things related to Bitcoin and cryptocurrency. I make videos on this channel almost every single day, lately 2 times a day. If you like what you hear or see, then please make sure to hit the subscribe button and click the bell to turn on notifications. If you'd like to take the conversation further or ask me questions or just chit chat, please make sure to join my Telegram group, the Bit Squad. Alright guys, today was absolutely brutal as the price of Bitcoin fell and people are panicking. During these times, you just have to breathe. And like I said in the intro, you need to understand we love the volatility of Bitcoin. And the higher the price gets, the more volatile it will become. So it is very good practice for you right now to stay calm during these times. Because let me tell you, if you think you're in knots now, wait until the price fluctuates 5K in one day, which I'm sure we will see over the next 18 months. But today we're going to talk about the relationship between charts and the price of Bitcoin. And if you've ever wondered what a CME gap is or why people always say that it needs to be filled, then please make sure to watch, as that is our ultimate destination and where we're going in this video. That sneaky CME gap makes it a 95% chance Bitcoin isn't done falling. Stay tuned to see what I mean. But the relationship between technical analysis and fundamental analysis to me is just crazy. Technical analysis is reading charts, which we're going to look at today. Fundamental analysis is everything that affects an asset's price that is not displayed on a chart, something like news. So the question is, which is more important? Well, the TA folks would tell you that the charts are the most important. And you can kind of think of charts as self-fulfilling prophecies. As we talked about many times before, financial charts are based on human psychology. So as you look over a chart, you find patterns that show how humans behave with their money. This is why resistance exists. A resistance line is a level on a chart that an asset just can't seem to go above. Because once a candle meets resistance, many people are going to take profits, and that's why an asset will have a hard time getting over it. But you see, traders make their next moves based upon what patterns they're seeing on the chart. So the next event on the chart only occurs because of the preceding expectation that it was already going to happen. For instance, if a chart is showing bullish trends, traders are going to take what positions? That's right. They're going to take bullish positions. They're going to go long. And the market is dominated by regular traders, whales, and bots. So when all of those people see a bullish trend developing, they're going to push it over the top by taking long positions. It's so fascinating though to me when things going on off the chart also seem to be pushing an asset in a certain direction. It leads people to believe things that may not be true. For example, right now, the coronavirus is absolutely wrecking all the markets. Or is it? Is Bitcoin falling because of the coronavirus? I thought disasters were supposed to make people run to Bitcoin to hedge assets. What I'm saying here is we have a magnet pulling Bitcoin down to the bottom with unbelievable force on the chart. And maybe, just maybe, Bitcoin falling has nothing to do with the corona pandemic. There's a magnet, it's $7,600, that is calling Bitcoin to it like a siren to a sailor. And I'm starting to be more convinced that we may have to make a pit stop there before we launch. And hear me now, we are launching. We are a little less than 2.5 months from the halving. I think Bitcoin will probably be around 12K at that time. There's definitely a scenario where we could go even higher. but I doubt that we'll be lower than 12K by the time the halving happens. But where did I get the 7,600 number from? For that, let's head on over to the CME Futures charts. CME stands for Chicago Mercantile Exchange, and it was the first group to launch futures trading with Bitcoin, which totally wrecked the market and was the beginning of the Bitcoin bear cycle in 2017. But these futures contracts are not like trading Bitcoin itself. One of the huge advantages of trading Bitcoin and altcoins is that the market never closes. But with regular futures trading, you can only trade weekdays. You can trade from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. This means the market is closed on the weekends. So when you look at a Bitcoin chart, there's never a gap because you don't have a traditional open and close of the markets. It goes on forever, one candle starting where the previous candle ended. So for crypto, futures trading gaps were something never had experienced before. But of course, traditional markets have dealt with gaps for a long time, and there's a common phrase in trading that says, all gaps must be filled. So is this true? Do all gaps in a chart need to be filled? Well, not actually. Traders are smart enough to know how to go with the trends. So to think that whales, traders, and bots who didn't get buy orders filled at a certain level would work against the market to fill the gaps isn't likely, especially when the gaps are small. These experienced traders want to go with the market, not against it. But once again, we circle back to the fact that these charts are self-fulfilling prophecies. So when you have gaps on a chart, they're going to act like magnets to pull the price up or down. You see, a study was put out that shows that 95% of the time, the Bitcoin CME gaps get filled. So going back to thinking about human psychology and trading with trends, it stands to reason that when traders see gaps, they believe they must be filled because they do. They do get filled 95% of the time. The good news is that the gap at 76.80 is so tiny that there's a chance this one is the 5% that doesn't fill. However, we've had some bigger gaps in the 8,600-ish range that did get filled today, so that's good. So where does this leave us? Basically, either way, we are going to see a strong rebound from here, in my opinion. We can see something very similar to what we saw in October, which was a massive wick down, only to bounce back and wick up faster than it dropped. Now, just as important as filling gaps on the way down, there are also gaps that exist above the current price action. Back in August, when the price was still dropping from the Plus token Ponzi scheme, a gap appeared that has not been filled yet. The gap is at $11,900. So there's some hope for you. There's some good news. If we can clear that last CME gap on the bottom side at 7,600, then the only gap remaining is at almost 12,000. The same way that the 7,600 CME gap is acting like a magnet holding us back, the 11,900 CME gap could pull us right back above 10K after we glance off the bottom of this dump. So what do you do with this information? Well, first, now you understand what a CME gap is, and you understand why people are so adamant that these gaps get filled. But knowing this information can help you to understand why sometimes Bitcoin makes these crazy nosedives or huge pumps. People see the gaps and they act accordingly. But in the short term, you should be ready for Bitcoin to drop to 7,600. If you're leverage trading, make sure you have stop losses in place. If you missed my video earlier on responsible leverage trading, I will put that above for you to check out. But now it's your turn. Please let me know what you think about these CME gaps. Do you believe that they are overblown? I mean, kind of hard to say that when they have a 95% fill rate, but you may think the technical analysis is complete garbage. If you do, drop me a comment below and give me your thoughts on that. If you enjoyed this video, please make sure to smash the like button and make sure to hit the subscribe button to become a member of the Bit Squad. Thank you so much for watching. Good boy out.